everyone, it's Jordan Robertson with Benzinga, and joining me today is David Song, PM of the HRTS fund at Tema ETFs. Thank you so much for being here. How are you?
Good, Jordan. Thanks for taking the time to speak with me.
Absolutely. So can you tell us about Tema? What do you guys do?
So at Tema, we focus on a number of investment themes and take a long-term perspective. And we run actively managed portfolios with a number of our investment professionals with several years of experience in the field, in various fields.
Amazing. And why invest thematically?
So I think there are a number of things that we find interesting specifically within healthcare. So we're running the HRTS fund, which is focused in one area that we think is quite intriguing and provides significant innovation in the space in the area. We would define the space of cardiovascular disease to include obviously areas like diabetes, obesity, other areas within cardiovascular disorders. We think it's a large growing market. In particular within obesity space, about more than 40% of U.S. adults are obese, and in addition, cardiovascular disease remains one of the largest killers globally. It's still the number one killer, responsible for a significant number of deaths, and there's been a lot of innovation, not just in obesity.
Absolutely. And you just launched HRTS. Can you tell us about the fund and why do you see so much potential for growth in this market?
So there are a number of factors that we find quite promising investing in this area. First, as we mentioned before, it is an area of high unmet need. Second, there are a plethora of companies focused on solutions in cardiovascular, diabetes, and obesity, what we would often call it the diabetes epidemic, from areas not just in obesity-based therapies like GLP-1s, but also we're seeing technological advances in areas like gene editing, where we see could enable solutions in cardiovascular disease, as well as medical device companies that provide solutions, either monitoring diabetes or providing actual interventional solutions in acute areas within cardiovascular diseases writ large. We also find that we're sort of coming out potentially out of one of the worst bear markets in biotech, which is a significant area of focus of the fund. If you look at the XBI, which is a measure of small cap biotech companies, that index has declined significantly since 2021. While it's rebounded recently, it's very well possible that we could be going for a third straight down year in that index. And there are a number of companies within that arena of small cap biotech that are trading at very favorable valuations.
Certainly. And how do you choose your holdings and how do you weight them?
So that's a good question. Well, we invest in a number of areas within this very broad space, either providing. We have categories that we look at that are broken down by certain technological features. For example, we would look at gene therapies, gene editing. We'd look at solutions specifically for obesity and diabetes. We'd look at medical device companies that provide solutions in these areas. And we also take another lens too. We would invest in basically three types of companies, generally speaking. One would be sort of that tend to be larger, that are cash flow generative with a very outstanding, in our view, research and development franchises. That's one that are what we call established companies. We'd look at a second category that typically have one or two products on the market that are sort of in their early stages of growth, but providing real commercial revenues and rapidly growing profits that we feel are companies that are trading at reasonable valuations. And a third category, which are typically small companies that either have platforms or compelling drugs under development, but not yet commercialized. and not yet generating commercial revenues.
And last question for you, David. I have a hot take. How is AI changing investing?
That's a great question. I think, like a lot of industries, AI is disrupting healthcare and in particular areas in medicine. I think where it pertains to investing in cardiovascular disease and diabetes, there are a few areas. One in particular is drug discovery. I think a lot of these developments, while still in the early stages, could potentially lead to significant productivity gains. And therefore, we are looking at a number of companies that are specialized within cardiovascular diseases, but also are enabled by advanced computational methods. Second of all, when it comes to diagnosis and treatment diseases, I think it's certainly the case in areas like diabetes and with the burden of chronic diseases, where people want to be empowered as consumers to make sound decisions. And we're looking at a number of companies and investing in a number of companies providing important insights into a person's health, whether it's glucose or whether it's other important vital signs or parameters that ultimately that data could enable a better treatment of various chronic diseases and ultimately lower healthcare costs.
Wonderful. Well, David, that's all I have for you today. Thank you so much for joining me.
Thank you so much.